recording. All right. So we are now recording. We are live. Welcome, welcome, welcome. If you're on the call, shout out to you. If you guys are watching this video through YouTube, if you're watching this video through chats, resource channel, right? It's super important to tap into what we're talking about right now, which is risk management. Risk management is super, super important when it comes to being a profitable trader, right? So we're going to look at some charts. We're going to break down a couple of things, but the first thing I'm going to go ahead and do is pull up a whiteboard on the screen and actually show you the importance of risk management and how you can actually scale your accounts when doing it properly, right? I'm going to tie it into not just Forex. I'm going to talk a little bit about it as well when it comes to the HFX, right? Binary options perspective as well. So it's going to be a little 2-in-1, right? Just to make sure that everybody's good. So let me go ahead and pull up the whiteboard really quickly and get straight into it. So guys, if you can see this whiteboard, go ahead and drop some twos in the chat. If you can see this whiteboard, just so I know that we're good and we can get into it. Twos. Awesome, awesome, awesome. Amazing. So guys, again, risk management, right? I'm going to show you guys how powerful this can be for the long-term success of your investing, right? For the long-term success of your trading, right? So let me go ahead and actually pull up some text, right? So this is risk management. Risk management 101. All right, perfect. So guys, when trading, right? When trading, let me make sure I type this. When trading, there are two rules. Rule number one is protect capital, and number two is make money. These are the two rules, the two most important rules. Protect capital and then make money. So regardless of account size, whether you're trading with $100, $1,000, $10,000, it's all relative, right? Now I want you to think, right? So let me type this here too. Think like a bank. Think like a bank. Don't think like an amateur, think like a bank. So this is where my banking experience, served me well in life, right? Served me well in life because in banking, there's really one thing that's important when it comes to accounts and everything, and it's called percentages. Percentages are everything when it comes to trading. All right, here we go. Percentages are everything. I need you guys to stop thinking in terms of money. Stop thinking in terms of money. When you start to think in terms of money, what's going to happen is that you're not going to have realistic expectations and you're not going to experience the compounding that you want to have, right? And lastly, when you're thinking in terms of money instead of percentages, you get emotional. You're going to get emotional. In trading, you have to be able to remove emotions from the equation. Now, obviously, that's a lot easier said than done. And obviously, when you're brand new to this industry, when you're just getting started, it's not something that maybe you necessarily are going to understand right away. It's not something that's going to click, first day hearing this. But as you actually commit to the skill set, as you stay consistent, as you actually grow as an investor, you're going to realize that this is the most important thing, right? Percentages are everything. Why do I say that, right? Because if you really look at big investors, look at Warren Buffett, look at Robert Kiyosaki, look at financial institutions, they don't talk in money, they talk in percentages, right? If you look at your savings account, there's something called an interest rate. If you're looking at loans, there's something called interest rate as well, but annual percentage yield, compound annual percentage yield, right? So you have to understand that if these big institutions that are in charge of billions and billions and billions of dollars, if you have people like Robert Kiyosaki, if you have people like Warren Buffett talking about percentages, then why would you talk any different? You have to become that person that can think that way. That's how you get the results, right? That's how you get the results. You have to speak the same language as the people that have the results you want. So they're not talking about, oh yeah, man, I made 100K. Oh yeah, I made 10K. They talk in percentages. They say, yeah, my investment portfolio grew 23% this year. So if they're talking like that and you're not talking like that, you have to have that realization first. And the thing is, a lot of people don't want to talk percentages at the beginning because they trade with a little bit of capital, right? If you're trading with $100, you're not going to think in percentages. Why? Because what do we talk about when it comes to risk management? So here's going to be a little bit of a back and forth, right? Because I believe in interaction, right? I don't want to just speak to you guys. I want to interact with you guys because I'm here to provide value to help you guys get results as well, right? And Go Live is amazing. You're able to see live trading. You're able to see setups. You're able to see wins, right? But one thing that they don't cover so heavily on the Go Lives, right? Because they're so focused on helping you guys, get the setups and everything, is talking about how to actually manage a trade, how to actually risk appropriately. But this is super, super important. So let me see in the chat, right? So I need y'all to be interactive on the chat. What do you believe, right? What do you believe is the amount of percentage of your account that you should risk on a given trade? How much should you be risking in percentages on a given trade? Don't worry if you're right or wrong. Speak what you believe, right? 5%. Okay, so risking 5%. 8%. How much should you risk? 5%. Okay. Okay. Anybody else? I know there's 5 to 8%. All right, so we're all between 5 and 8. Okay. 3%. Okay. 3%. Or what should we be risking per trade? So we got 3, 5, and 8, right? 3, 5, and 8. Now I want to make sure we're on the same page, right? Because I know that we are trading binary options, we're trading HFX a lot, and I know that if you guys are following a compound chart, if you guys are following a game plan, right? I know that 5% is a big number that they speak about when it comes to how much you're looking to make on a day or trading day, better said. But what I'm talking about is how much money you should be risking of your account per trade, right? So the correct answer, and this is not Rich's response, this is Richard's information that he was learning on Go Lives, in the academies, in our advanced courses, right? If you really look at it, the proper risk per trade should be anywhere from 1 to 2%. Right? So if we're going by what we're learning in the education, the answers that you are giving me is not incorrect, right? There's no such thing as right or wrong, but you have to really analyze where did you get that information from and why, right? And I'm going to explain to you this. Is it easy to make more than 8% by accident without realizing? Look, in trading, the word accident and making money do not go hand in hand. There is literally no such thing as an accident. If you are still speaking about accidents, you're probably not going to get to a big income until you change that language, right? Because the language that you're speaking is a reflection of what's going on in your head. It's a reflection of what you've been actually not hearing, but listening to, applying, right? So there's no such thing as making 8% by accident, right? Because guess what? If I'm risking 50% of my account on a trade, I can easily sometimes make 1,000% of my account in one trade if it ends up being a winning trade, right? So what you got to understand is this. When you risk 1 to 2%, right? Let's start with 1%. Let's start with 1%. If we're risking 1% per trade, how many trades would you have to lose to blow your entire account? How many trades would you have to lose to blow your entire account in a row if we're risking 1%? Drop it in the chat. 100. Who else says 100? I want people to really speak what they believe. If I'm risking 1% of my account, how many trades would it take to blow your account? I need to see the interaction. Let's get it. Let's get it. Let's get it. 100. 100. Okay. Yeah. So it seems like a little bit of common sense, right? But I don't believe in assuming. I want to make sure everybody's on the same page. Right? So if we're risking 1%, it means that we would have to lose 100 trades to lose all 100% of our account. Now, if we're risking 2%, how many trades would it take for us to blow an account? Drop it in the chat. 50, 50, 50. So I want you to pay attention. I want you to pay attention. Because all I did was change the percentage by 1%. And we just went from 100 to 50 trades. I want you to really look at that. Now let's go with the number that you're giving me. If I'm risking 5% on a trade, how many trades would it take for me to blow my account? 20. Okay. 20. So this is what I'm trying to tell you. I'm not saying you're going to lose 20 trades in a row, right? If you're losing 20 trades in a row, you are doing something completely wrong. Completely wrong. Whether it's taking your own trades or whether it's taking signals on the VVS chat or listening to our educators, there's no reason why you should lose 20 trades in a row. In fact, you shouldn't even lose, not even, I would say even probably less, but 10 is like, whoa. It's like, whoa. So this is what I want you to realize, right? Money management is super important. A lot of you guys, you jump into a trade and you don't know how much you're risking on that trade. You don't even know how much you're risking on the trade. If you press buy or sell and you don't know exactly how much money you're going to lose, you are in a very bad spot. You're in a very bad spot. If you don't know exactly how much money you're going to lose when you hit the buy or sell button, if it hits stop loss, you're doing it wrong. You're still looking to finesse. You're still looking to get by. You're still looking to half-ass. You cannot afford to do that. Literally, financially and habitually, you cannot afford to do that, to develop this skill set and to make money. Now, this is what people don't want to hear. And I'm glad Nick Gomez talked about this a little bit yesterday, right? When you have a small account, and yes, small accounts are okay. You need to start your first live account with a small account because of these reasons, because of this lack of awareness and education, right? So it's okay to have a small account. You can grow a small account, but you need to have the expectations, right? To know what it's going to take to grow to a number that you really want to see, right? So obviously, if you guys want to see, right, nice gains, you're going to need some nice capital, right? You're going to need some nice capital because no one wants to say, oh yeah, I have a $100 account. I'm going to risk $1 to $2, right? To make $4 to $8. Nobody came into this business to make $8. I'm very aware. Neither did I. Right? But the habits that you develop at a small size do not change just because you get to a bigger size. The habits that you're forming with $100, if you cement those habits, you won't do it you're still gonna do it with 1,000. You're still gonna do it with 10,000. You'll still do it with 100,000. So you can have bad risk management and blow 100K the same way you blow $100. And this is what you need to understand, because until you face that and behave accordingly, you're going to find yourself either blowing accounts or on the back and forth. I'm breaking even. I'm making and losing, making and losing, making and losing, making and losing. And you're going to stay at the middle. Now, the important thing here is that you need to have a good attitude about where you're at. And I know this is a risk management call, but emotions come into everything that we do when it comes to trading, when it comes to building a business, anything. So you need to have a good attitude, even if you've blown an account. You need to have a good attitude, even if you feel like you're going back and forth. Because the minute that you get frustrated is when you throw rules out the window. If we're playing a sport like basketball and somebody hits me really hard, right? They hit me really hard, and the referee doesn't see it. An emotional person is gonna go and do something called get revenge. They're gonna run down the court, and then they're gonna hit the guy probably twice as hard, and the ref is gonna definitely notice because he's gonna see your frustration. And what's gonna happen is you're gonna get called for a technical foul, and you're gonna cost yourself, and you're gonna cost your team. You're gonna cost yourself, and you're gonna cost your team more damage than needed to be happen if you would have just kept a good attitude, not gotten emotional, and said, okay, I need to adjust now. Because revenge trading is another form of not having risk management. Because you'll go and say, or you know what, I have $100 account, right? I want to flip this account. I'm gonna risk $20. I'm gonna risk $20. If I win this trade, I'm gonna make 100, and I'm gonna flip it. Right? What happens when you lose the trade though? Now you just lost 20% in one trade. And you're like, whoa, nah, I can't go out like that. I can't go out like that. Let's double up. Boom. Let's risk 40 next trade so I can make up for what I just lost and then some. And then you lose that one. Now you're down 60%. And what happens is that it will get to a point, whether the number is 20, 50, 80%, that you just come to your senses, you get humbled by the market, and you realize, damn, I need to pull back a little bit on my risk. I need to pull back a little bit on my aggression. I need to take my emotions out. And then you have a streak where you win, just to maybe or not even make up for the big L's that you took. So what happens is you got cocky because you just won 7, 8 trades in a row. You're like, oh, okay, we just had a little hiccup, right? We just had a little rough couple trades. We had a little rough trading week, but I got it now. We up. I made it back. And then you start going back to what you did in the first place, which was say, if the trades be hitting like that, I'm gonna up it again. And then you up it, and then you lose. And it's gonna get to a point where you're gonna come to your thinking, and you're gonna say, man, I don't know if trading's for me. Man, I don't know if trading works. Man, I don't think I can do this. Man, blah, blah, blah. This is your psychology. Your psychology is absolutely everything when it comes to trading. Because the minute that your psychology gets messed up, you're gonna have to go through a lot of growth and forgiveness of yourself for you to be able to compensate and get on the bounce back. And listen, the reason why I can explain this so well is because I lived through it. Right? So what I'm telling you is that I can give you these trainings. You can see this information and you may forget. You may have not taken notes. You may have said, you may have got into an impulsive moment, right? You may have got into an impulsive moment where you know this, because look, it's not about knowing, it's about becoming. You know that you shouldn't eat unhealthy, but when your girlfriend tells you, hey, let's go out to eat this burger, impulse. Hey, I shouldn't smoke, I should be focused on my business, but impulse. This is where you have to realize that your mind, you have to learn how to control it. You can't let it control you. You have to be a professional. You have to be able to say, I'm the master of my environment. My environment doesn't master me. This is why personal development is so important. This is why reflection and understanding how you operate as a human being overall is going to trickle into this. That's why you see people that are very disciplined from the military, or why you see people very disciplined from the gym and having a solid diet, can transition into a space like trading and be able to be pretty successful a little faster than the average person. Because the average person is not disciplined. The average person lives off impulse, emotion, instant gratification versus long-term goal, long-term positivity, right? It's easier to do the wrong thing and think you can get by, but there will always be a time where it's going to come back to haunt you. It may take a day, it may take a week, it may take a month, it may take a year. So I don't care if somebody catches 20,000 pips. I don't care if somebody comes in after me in this business and makes more money trading than I have in 2 years, in a month. I don't care. You know why? Because if you're having such quantum leaps in your trading account with the wrong habits, you will have a day where you get checked. And you will get checked so nasty that it's either going to make or break you. Period. Period. So you want, that's why I tell you, you want to develop the right habits from day one. From day one. Because it's kind of like this. You can be 17, 18, your metabolism is a little bit quicker. So I can go to the gym, I can eat bad, I can drink a lot, I can do all these things, and I'm gonna still get some results. But there will be a time later when your metabolism slows down that those bad habits that you were getting away with once upon a time start to catch up to you, and you realize that you cannot behave like that anymore if you want to continue to receive results and if you want to up your results. So I'm telling you right now, what the burden of today will be the pleasure of tomorrow. The pleasure of today will be the burden of tomorrow. Everything's yin and yang, as above, so below. What you put out, you get in. It's literally all, it goes all full circle. And this is why risk management is so important, because if you actually risk manage, it's a action. It's a risk management is an action that reflects that you truly embodied what it is to apply the information the right way. If you don't risk manage, you don't understand yet. You kind of know, but you don't understand. There's a difference between knowing and understanding. You can know things and still mess up, but if you understand something, messing up doesn't even happen anymore, because you became a profitable trader. You became a proper risk manager. And that's when you deserve the results. So I want you to understand, having $100 account, risking 1 to 2%, making 4 or 5% a trade, and taking that $100 account to 200 or whatever the case is in a month is a massive success. It's a massive success. But you have to understand that, because if you get discouraged by the dollar amount, right, you're always gonna be thinking like the 95%, which is why percentages matter. You want to have nicer percentages, you need to get your money up. Right? Now, here's the other side. You can have bad habits and have spectacular results for a short period of time. You can have $100, flip it to 500, and you kind of got lucky. And you know what? If it's happened, cool. You know what? Hey, count your blessings, withdraw that money ASAP. Put it in your bank account ASAP. You grew that $200-300 account to 1,000. Be so grateful that God gave you that mercy, that you landed a good streak, and start treating that $1,000 account the proper way. And you'll realize, like, wow, you know, my bad habits took me somewhere, and I'm gonna just be grateful. I'm gonna promise to drop those bad habits, and I'm gonna progress now the right way. Right? So let me show you. right? Let me show you something. So I think for me, a number that is really nice to have in a trading account where you can actually be satisfied to an extent with your results would be $1,000 account, right? And obviously money's relative, right? There's people that are going to be satisfied with making $50. There's going to be people that are not satisfied until they make 500. There's going to be people that are not satisfied if they don't make $500,000. There's people for everything. But overall, right? Overall, right? $1,000 is a nice account to have. And I'll explain to you why. Because with 1,000, I can risk 1 to 2%, which is equal to about $10 to $20. Right? Now, this is the other part of risk management that will get you excited and will help you understand that there is you know, some upside, right? Because I think a lot of people look at risking 1 to 2% like a bad thing. Like, oh man, that's not good. Oh man, like to protect my money, I'm not gonna make a lot of money, but check it out. What you need to do is find opportunities in a market where your risk to reward is nice. So let's give you this perspective. On a trade, you should be looking for a risk to reward of 3 to 1 minimums. 3 to 1 minimums. Let me see. There we go. Now, the reason why is because now I risk $10 to $20, but I make $30 to $60, depending on if I do 1 to 2%. Now, if you're making $30, $60 a trade, that's not bad. That's not bad because let's say you even got only 5 good trades a week. 30 times 5 would be $150. Times 4, that'll be about $600. Your membership is $175, right? So you're walking away with a profit of $420 roughly, and you're gaining more knowledge. So the education, your membership, is actually money that's coming in as well, but way later, because it's an investment into continuing to learn. It's an investment in continuing to grow, which does make you money, just not in the physical right now. Right? So look, this is why having 500, 1,000, catching risk to rewards, 3 to 1 minimums, right? You can make a solid income, right? Now, you can find setups in the market where you're having 5 to 1, 7 to 1, 10 to 1. They do exist, they do happen, right? So there's gonna be trades where you risk $10 and you make 80. You risk 20 and you make 160. You have those trades like that, right? And I'm telling you, if you're only taking about 5 trades a week, right? Sometimes you're gonna take more, right? So it's all about having the proper expectations. It's all about understanding that you want to get your money up, right? And that's why this business, right? I Am Mastery Academy, residual income is so big, right? If you're working a job, stay at your job for a while. Use some of that capital. Develop other good habits like not blowing your money on the drip, not blowing your money on eating out expensive, you know, not throwing it away with things that you don't need, because now every dollar counts, right? Investors understand that every dollar counts. They're very meticulous with their money because they know what every percent, every dollar can do, right? So that's why I'm telling you, you have to become that person. You have to think that way. You have to operate that way, and then the results come. The results don't come and then you change how you behave. The people that you see that you look up to, the Nick Gomez's, the Matty Pips, the Millie Mills, right? These people embody risk management. These people embody proper training, proper trading, right? And then because of that, they got money. So this is so important. This is so important, right? Now, here's the flip side to HFX, right? HFX. HFX has a negative risk to reward. HFX has a negative risk to reward. What do I mean? When you're trading HFX, the payouts per trade range between, on average, 70 to 85% payouts. So that means that for every dollar that you're risking on HFX, depending on the currency pair, you'll see it. When they're calling out a trade, it'll say the pair and then 70%, or it'll say the pair 75%, pair 80%. So that's how you know, okay, if I'm trading a payout that's 70%, that means I'm gonna risk every dollar, I'm gonna make 70 cents. Every $10, I'll make 7. Now, when you're thinking in terms of Forex, where you're looking for setups, you're looking for a high risk to reward, right? It only makes sense. Why would I put $1 up if I'm gonna only make less than $1, right? When you think that way, it doesn't make sense. But now with HFX, the way that you compensate for that is by having a high win percentage, which is why Matty Pips, Millie Mills, all these educators, if you always see their flyers, right, their percentages are always 70% to 90% wins, right? Because their strategy is very precise. They know that in HFX, in binary options, for you to actually go out there and make income, you need to win a high percentage of your trades, right? Because if you lose one trade, it's going to take like 2 just to kind of make it up and win some, right? The flip side to trading Forex is that when I'm risking $1 and I'm getting paid $3 for every dollar I'm making, I can lose 3 trades in a row and then win my 4th one and be at break even. If I'm trading 3 to 1, I can lose, and lose 3%, right? And then that 4th trade, I make the 3%, break even. So you can actually be a trader that doesn't even win 60% of their trades. You can literally win half of your trades, 5 out of 10, maybe even a little bit less than 50% accurate, and still be profitable. Now, I'm not saying don't aim for a high win percentage, but you can afford to lose a lot of trades and still be okay when you have proper risk management and you have good risk to reward setups. HFX is a different story. You need to make sure that you are very accurate. You need to make sure that you win a lot of your trades, which is why, especially if you're in your first year of trading, you want to follow these educators. Matty Pips used to be a student just like you and I on Nez Vasquez's sessions. He became a multimillionaire because he followed Nez until he became 6-7 figures, right? He didn't just say, oh, I got this now. Oh, I'm a month in, I'm gonna start trading on my own. Guys, come on. You have to be able to prove to yourself. If you can't flip a demo account multiple times with risk management, you shouldn't trade on your own. You shouldn't trade on your own. Leverage the professionals, leverage the educators, take the trades that they're taking because they do have the results. And you can basically just get fed off of that. You want to become a profitable trader on your own, demo on a Forex account, demo on an HFX account, and show yourself with proper risk that I can genuinely, day after day, week after week, month after month, be able to consistently profit overall. Then maybe you can consider trading on your own. And that's okay, right? It's okay. You don't have to become a great trader in 30 days. You don't have to become a great trader in 90 days. You don't even have to become a great trader in your first 2 years. This is a skill set. The same way that people have the mindset to go 4 years in college, 12 years in college, to then get a career path started, if you can just have that same mindset, right, for this business, for this environment, for trading, for building your business, it's going to serve you very, very well, because you need to have peace in this process. You need to have absolute peace inside in the process. Flipping a $100 account is not going to pay your bills. Can it happen? For sure. Right? In a perfect world, I want to do that for you. Right? And it's been done. It's been done. But consistently, month after month, year after year, to scale to a 6-figure and above, you can only get so far with bad habits. You can only get so far. So guys, this is vitally important that you take this into account. Trading Forex, risking 1 to 2% is the sweet spot. Finding high risk, finding high reward to low risk setups is how you're going to grow that account. On HFX, you want to have a high win percentage to grow that account. You want to follow educators until you prove to yourself on a demo account for months and months and months that you can actually grow that account. Then you can consider trading on your own with live funds, right? That is the absolute truth. That's the absolute best advice that I can give to absolutely everybody, right? So look, this is just what I recommend. This is what is taught. There's no right and wrong, only what you believe is right or wrong. So if you want to be a high roller, if you want to risk all of your account on one trade and you flip it, go do it. But if you want to become a professional, if you want to get professional results long term, right, you want to adapt these philosophies right here. And you want to understand that you have to continuously get educated and surround yourself with people that are doing it the right way so that you can adapt, right? I know we're in an environment where there's a lot of new traders, a lot of new people in the business. And if you look left, if you look right, and you're watching what they're doing, you better be careful, right? We're all here to help each other. We all understand that we're all at different parts of the journey, but we all look to our educators. We all look to our CEO. We all look to the people that created this opportunity for you to say, these people have my back. These people understand what it's going to take to help us get to the next level. Let's submit. Let's drop ego. Let's make sure we listen. Let's make sure that we stay consistent and apply the information that you learn, and don't disrespect your rules, right? These things that you're seeing right here, write it on a journal, right? I have a journal where you can see the rules literally written, right? It's like a code. You have to have like a code of honor to yourself when investing your money, right? Logging your trades, right? Showing the trades that you've taken, the results, what happened, how did you feel during these trades? Did you actually proper risk? Did you not proper risk? You'll start to pick up on patterns in yourself that are going to reveal to you what adjustments you need to make and what things you need to keep doing so that you can keep getting the results you want. Right? And it all comes down to risk management at the end of the day, because you can have the best setups in the world where you got these sniper entries and you feel like I figured this market out. But if you can't money manage, you're just going to be that person that is going to be on the back and forth forever. And that's not where you want to be, right? It's not where you want to be. So this is pretty much the main thing when it comes to risk management, guys. I'm going to go ahead and end the recording. Let me see if I can go ahead and end the recording here.